The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I heard Larry's not going to be on this morning, so I'm going to hopefully fill in for him. We're going to see about that. I would be honored to do so. And, 2 o'clock today, unless you guys have been living in a cave, I think you know that there's a big announcement. In my opinion, we're probably going to be a little more hawkish. They almost have to, in my opinion. So we're looking at these notes and bonds. I think what Tom O'Brien has been, talking about and pretty much correct on with these. I'm just going to take a look at the 10-year really quick as we reference this. Primal living, cave living, they kind of go together. Just going back to the roots. As we look at the June contract on the 10-year, got a new demand area attempting to appear, but again, we're kind of at this stage. This 129 is the big lever point here on this thing. And I want to reference what's going on here with the utilities. And I keep going back to this trade. It's just been such a killer trade. It's been painless. And really hadn't given us any indications to get out of this. As we look at that FOMC meeting coming up, we look at that 10-year kind of sitting below those inflection points. Haven't had a Friday. Let me see. We had a Friday close below there. I think we did, actually. Let me just reference that really quick. Yeah, last week. I'm sorry. Just want to make sure. And a lot of times we'll come up and retrace and hit those at 129 general neighborhood. We got this meeting, you got those ricochet knee-jerk reactions that are only there to run stops a lot of times. That could happen. Again, that 129 is going to kind of be the line in the sand for a lot of stops. Just remember that if we get any type of dovish comments, that's going to be support in my opinion. But as we look at this and as we've looked at the utilities over time, this thirst for yield situation, it's been a great trade. And every time we've found support there, every time we've looked at support, breakouts, support, breakouts, support, breakouts, support, breakouts, it's been something. And we look at this 240 to kind of regulate the trade up. Now we've got this FOMC meeting happening. In my opinion, again, going to have probably a little bit better chance of hawkish comments and dovish. The 10 years closed below that area. Now the utilities have a new demand area up top, and we've got an inflection point on the daily at 48.45. So what does this all mean? And as we have looked at this in the past as a very strong ETF with a lot of those components inside, trying to leverage the components inside. I'm going to pull up the XLU right now. Is that still on my screen? Just making sure, Al. Sometimes when I switch, we miss the screen that I switched to. It's my problem with my machine, I guess. But if you guys are seeing my scanner right now, you see a sea of green. There's an exception here. Potomac Electric Power Company is the only instrument trading below profiles here, and actually the only other one, even with an arrow down, NRG Energy. I'm going to reference that really quick just to show you. Yeah, I mean, this is NRG. This is the only one literally that's been in a down trend that's now come up and reached some inflection points around 1397, that inflection point on the daily that we just spoke of. Now remember, this breadth has just gotten insane lately, and when we get up into this God, above 70 area, that's a very big warning sign. And we've actually reached 93 before, and we pulled back. And then recently we've reached 86, and now the breath is starting to fall off here on the intermediate. So again, the XLU being at an inflection point on the daily, the possibility of those hawkish comments, the 10-year sitting where it's at, and the possibility of it heading lower, the XLU may traverse and explore the entire fair auction down to 46.84. So you got about a 2-point ride there. Possibility of a 2-point ride in the utilities coming off. But the good news is, again, we're always looking for the least painful situation. All things considered, this is not the weakest thing in the world to short, but you've got a great risk reward. 48.45 stops above. I like it. What did the guy in Dumb and Dumber say? I like it a lot. So that's my Jim Carrey impersonation today. Let's take a look at gold, because remember, a lot of things are going to come, just positions are going to be adjusted. There's going to be some, the volatility with a smidget of volume, remember, before these things. So you're going to get these particular instruments which are very interest rate sensitive. And in our case, interest rate sensitive comments, because it seems like the interest rates don't really ever have anything other than just to go down in the past, 7 years. So as we look at gold, these are the inflection points to pay attention to. You've got 12.18, 12.19 here as support. I don't really recommend or even suggest doing anything until at least one of these inflection points is hit, 12.18, 12.19, or 12.53 up top. And again, you get some inflationary hawkish comments like inflation's we got to control that. You may get a little bit of a spike up in gold, but 12.53 will be something I think you got to look at as targets if you're long, and I think gold's going to kind of range around here, and that would be something to day trade off of on the short side. Here's the 240s right now in gold. I'm kind of ignoring these inflection points, which are also given in the scanner. I'm going to pull up gold really quick in our futures section. There it is. And there's those inflection points on the 240, 29 and 40. 1229, 1240. There's those 1264s that we've talked about in the weekly for a lot. And remember, these arrows are up on the gray sections. They're in uptrends without question. That's really cool, because a lot of times you can, you say, okay, the stock's in the balanced area, but at least you can quickly see now that the stock is, or the instrument in this case, gold, is still in an uptrend, even though we're within the balanced area. And here's the inflection points. So there's that 12.18, 12.19. There's that 12.53. I think Joey's going to come on the show about 8:30 today. We're going to talk, about what's going on in the FOMC environment, and then how that may affect a couple of other instruments that we're going to look at today. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, guys, let's take a break from talking about the XLU and the notes here for a second. Let's go to CMG. This is one I really thought was looking very attractive. And obviously this morning we're down a little bit here, 475. So, now we've gotten in an overnight fashion gapping down below these situations on the unfair lows around 500, 494, 500. Not good. This is a stop out situation. I like the way this thing was spinning above the weekly here, but now this is something we just got to take our medicine and move on. And this is why I love, spreading the risk out and trading quite a few instruments. A couple of guys have come on recently, or actually sent me some emails about some instruments that they've gotten dug in on and specifically traded singularly. It's not always a good idea to pile into one instrument. I think we've got Tom O'Brien on the show right now. Tom, are you there?
Good morning. What's happening, man?
Hey, man. Thanks for calling in. It's always good to hear your voice in a time of trouble.
Time of trouble. Hey, it's great to hear you kicking us off every morning. You kidding me? It's awesome.
Thanks, man.
You just brought up a great point too about trading one instrument.
Yeah.
What happens, folks, which is really cool, is that the longer you're in this business, you want to be able to trade all instruments.
Yeah.
And, just take it little by little. But that's what that scanner does in an amazing way, because you can go from one instrument to another one. Because guess what? Sometimes some instruments just, you don't know whether they're going up or down. So it's like, okay, go to the next one, man. There's so many different things out there that you can trade,
Yeah. And, I had a couple emails this week, and I was trying to get your call on while I was talking about this and starting to stutter and stammer again. But the point I was trying to make was, people have sent emails in. It's like, oh God, it's the same product, S&Ps. There's ways to really spread the risk out, as you just said, and not get addicted to one thing and, over leverage yourself in any one instrument. I mean, this is a probability game without question. And
big time.
The smaller your data sample is, the less and less that probability, scheme, if you will, or plan will kind of pan out. So things are going to happen, like you said, on individual instruments, and there's no way to control it. But if you kind of parlay that out into many situations in literally small amounts of shares or contracts, Tom,
Sure.
that just spread it out. It is what it is. If you only have one contract on the S&Ps and they go up 80 points and you're kicking yourself because you didn't have 5 or 10 on, you know what? You probably still did the right thing if you have a monetary, game plan in place, money management plan. That's the total. That's how these guys on the floor, or
That's the whole ball of wax. Yeah, no doubt.
we say it all the time, but I don't think we say it enough.
No, I agree. No, there's no doubt, man.
Yeah.
So today with the Fed, right? Now this,
Yep.
this, when I was just listening to you, it's like so weird, man, because like I'm still short bonds, and
Right.
I'm looking at it, and I'm saying to myself, okay, so this is kind of weird because I don't expect them to go up on rates, but man, the 10-year note, people are selling it off, man. It's the third day in a row it couldn't hold price. So it's like, okay, so what's happening there? And then in the context of that XLU, it's like the reality is that I guess I think it's interesting because if the 10-year goes up, see what's really happening. The 10-year is going up, but the 30-year is kind of staying there. What has happened is that the spread between the 10 and the 30, this is the least it's been since 2007. So that gets kind of intriguing because the Fed can move the 10, but they realistically the 30 is all about what's going to happen longer times. You know what I mean? So
Right. No, I think you're right there. So do you think, what's your gut feeling on going back to the XLU? Because I was, I'm sitting there thinking, okay, yeah, it's kind of okay, people maybe, in those in sector rotation type events, I mean, that's when a lot of these long short models kind of get hit a little bit. And I was thinking this might be one of them because of this, FOMC kind of change in tone, possibly whatever. Again, I'm a little bit more on your side with, they're probably 65% hawkish and 35 bearish, or excuse me, dovish on the comment scene. But, will the XLU possibly even be a safety play? If these, if these notes and bonds sell off, the market won't like it. You know what I mean? And then do they pile into the XLU? Go ahead.
No, I know the XLU can be an ABC up, man. I mean, last month you talk about piling in. It did 433 million shares. So that's like pushing into a swing point with volume. So that's almost like, you could use 33, which is the low of November, as an A point. And your B point is 49. It's like, oh man, that's $16, and you seize 40, which gives you a 56 market, which is
wow.
That's how that's looking, man. Because it has volume. It pushed with volume. People are buying it, man. And when you look at the scanner, I saw there's only one equity inside, but that's non-buyable. That's amazing, right? I mean, that's
Yeah,
so there's not even a turning point yet. You know what I mean? It would have to be quite a turn for those to basically all go neutral or negative. So
totally. Yeah, this POM is complete crap here. There was another one I looked at earlier that I thought you would like the setup. It was NRG. I don't know if you've seen this one. I'm showing it on the scanner right now.
Okay, cool. Yeah, so this is
Kind of got back up into the top of that week, considering that's it.
Yeah, this is a nice setup.
Yeah.
Yeah, because we were at 1330. That can go to 1494 in a heartbeat, man. Go a lot higher, but that's I like this setup. Yep.
Yep.
So what do these people do?
Not sure, actually. Just picked it up here.
Power generating facilities in the United States. Power generating facilities. They pay 4% dividend too.
Well,
that's set up, man. We're gonna be rocking at 2:00, man. No doubt.
Yep. What's your outlook on gold? I know you've got an outlook.
I'm bullish. I like what it's done. I like how the setup is too. Right now the what we did yesterday is that we rejected lower price. We had lighter volume. You know, today there's no doubt. Today's a big day. There's no doubt. You know what I mean? And to me, this is just in a consolidation. I mean, we you know, when we look at it, you know, we're at 1047. You know, we ran a straight line up to 1263. You know, we got higher, but realistically 1263, and we're consolidating out there. So, you know, that's looking to me like it's going to make another run, and that's going to be it. So technically, it's there. Fundamentally, it's definitely there. I mean, negative rates across the world, that's a no-brainer. It's like, okay, you know.
Well, man, thanks for calling in.
Absolutely, man. Have a great one. Thanks so much,
You too.
John. Have a safe one.
Yep.
Bye-bye.
Yep. Thank you. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we're honored to have the Oracle of Hong Kong on with us. Joey, are you there?
Hey, John. How you doing?
Good, man. Good to hear your voice this morning.
Good to be on. Good to be on.
Or this night, in your case.
Yeah.
Hey, I know you have been in China taking care of some things on mainland China. I know you've been out of sorts, but we got a big FOMC meeting today. You got any thoughts on it? You got any reactional trades based on your thoughts going on?
Just on, I guess it would be, the treasuries.
Right.
Treasuries, had to move down. We're at a pivot point right now,
Right.
and I think we may break down further in treasuries because I think people are expecting a June rate hike again. So the U.S. is still going pretty strong compared to the rest of the world, and even though the dollar hasn't been reacting, I think the dollar might reassert itself as well, the DXY.
Uh-huh.
So we might be looking at a double top on the euro dollar as well. So
Okay.
that's something to look at. I think Janet Yellen's going to be, I guess, slightly hawkish, and people are going to still expect a rate hike.
Well, I believe everything Donald Trump says, and he says there's 43% unemployment. So, so we got to take that into consideration also. So,
Yeah.
so it looks like the dollar, we we're coming up and maybe starting to break back above the daily unfair highs here, and retracement. I hear what you're saying. A retracement back into 97.75 on the June contract is what I think's in order here anyway. Just from a close below, go back and retest. So I kind of hear what you're saying on the dollar reasserting itself in the short term here. Gold. I mean, thanks for explaining what you just said, but we got to, and I think everybody's on board with that. I mean, I think it's so slanted towards they have to digest these things, and if you digest these things that are going on with the numbers that are either valid or fake, whatever you want to look at it as, it's incredibly crazy to have zero rates. Let's take a look at gold. I know you're a gold fan. I talked about some inflection points to pay attention to this morning. I don't know if you were listening to the show, but do you still think we're looking for support to go higher here? And
Yeah, I
what's your
mean, I'm
thoughts
not
on
one
this?
of those, ever long gold bugs or anything like that. I
Right.
would,
Okay.
I'm, I haven't looked at gold in a few years just because, it's just been languishing, and doing nothing. But this is the first time that gold has, broken above the long-term downtrend, for the last few years. And, in February, we actually broke above that. And, we're consolidating actually very well here. 1218 is the daily unfair low, and we've held that so far. It had to correct after a pretty strong move from 1050 straight up to almost 1300, 1280 roughly.
Gotcha.
I still think that 1350 is where we head to. 1350 to 1400 is where we head to. So this is a pretty natural correction that we're having here. And the world's banks are still printing a lot of money.
Right.
In in Japan,
God,
Europe,
are
and
they?
everywhere else.
I mean,
In
are
China.
they? That's an understatement. Is that incredible? I mean, that's
Yeah,
it,
in China
yeah.
they are too. So,
Yeah.
even though they're not advertising it, they are.
Right.
So yeah, so it's a pretty normal correction that we're having.
Right. And a lot of
Um,
times, guys out there, if you haven't traded gold a lot of times it'll overshoot these inflection points, and then kind of, do the right thing, so to speak. So just be aware, keep your stops in. This thing can get away from you if you're trading some of these numbers that we're talking about today. I'm with you. I mean, I think the thing is still looking for support. And I was kicking back the other day, thinking about what you had said about the canary in the coal mine type thing with gold. Like, what's going on here? And I know we're talking about printing money again, and that's definitely bullish for gold. But I was thinking, I was sitting there thinking it's probably a Trump barometer too, because
it is. It is.
if
Go up.
yeah, I mean, if he's gonna, if he gets elected or whatever, that's up in the air. But
Gold and oil.
Yeah, I mean, think about it. If he gets selected,
Yeah, absolutely.
his main goal is to dismantle companies doing
Everything.
business offshore and everybody making, getting their job back. But that has a kind of a self-correcting effect, which is, okay, well, if everybody starts getting their job back and making more money, then inflation's going to happen
Let me tell you,
like crazy.
gold is the expect the unexpected trade. Okay, so
Well said.
when when Trump comes in, you have no idea what to expect. So why
Throw
not
that in
hide
there
in
too,
gold? And oil is definitely another Trump play as well. So, oil could shoot up to $100 again if things go awry when he comes into the office. So,
Yeah.
there's definitely some gold and oil are definitely very strong, Trump plays as Trump gets closer to the nomination and everything else.
Oh my goodness. Wacky times. Anyway.
Wacky times. I hate politics. I don't want to really talk about politics, but there are some obvious political trades on the back of all this mess that's going on.
For sure. Hey, all things considered, what we just talked about, S&P's, yesterday afternoon, I was looking at the breadth, kind of rolling over, starting to kind of get, negative again. We've got pre-market action going on here, and some of our charts are just getting ready to update here. But we crossed into negative territory yesterday afternoon, or yesterday actually, on our short term. And I mean, we got a new profile here on the daily, getting ready to appear, trying to appear. Do you think we're looking a little heavy here on the S&Ps based on
I certainly
comments? Do. I do too.
I certainly do, because I don't really see enough reason for us to break to new highs.
Right.
We've come a long way on the on the bounce back. We've basically, and it looks like we might be making some kind of another top coming here, and so I wouldn't be fully long on S&Ps here, and some of the sectors like small caps, healthcare, biotech, they're turning down again. So some of the leading sectors are definitely turning.
Wow, good thought there. Hey man, if you want to hang out, stay on. If you can't,
sure.
Okay, great. Thanks guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and we've got Joey Jung from Hong Kong, and we were just finishing up with, gold still kind of buy on the pullback scene, gonna have some volatility. Just summing up things for people joining late, Joey. We've got the notes that are coming off already based on those housing start numbers, and I think like Tom and you and I are saying, probably going to have some follow through on the downside with those things. And the U.S. stock market does not seem to like that. And that's kind of what we've started talking about here. Already coming back, was positive this morning, now back to 2000, 2001. So we were, the S&Ps, I think we were in concert here together on probably not a lot of upside left with this particular instrument. Where do you think the downside could be?
Well, I'm hoping downside it actually gets to 1750, sometime in the summer, so that we have a really great buying opportunity again. But this market has been really stubbornly just kind of buy on every little dip, 5% dip kind of thing. So
right.
Hasn't come yet, but I guess this bull market is very, 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 very old. It's one of the longest bull markets ever, and nothing lasts forever.
Correct.
And we haven't had a significant enough pullback yet. The one that we just had doesn't really count. So I do expect a bigger pullback. And we haven't had a panic. I don't know what that's going to be caused by, either political issues in the U.S. or another big China debt debacle, or it could be the European pigs crisis, coming back into gear. Because I can tell you for a fact that none of those debt problems went away. They just kind of got swept under the rug, and all of that debt interest is still piling up. So those are a few of the things that may cause a big downdraft in the markets. But right now we don't know which one yet.
Okay, so it's always a tug of war when it comes to this market's been drunk on low rates, right?
Yeah.
So now that there's a hint, a smidget, it's almost, it's the greatest indicator in the world. These, in the short term at least, these bonds are coming off a little bit here in the market. It's like, oh my God, and now the market comes off every time the notes come off, which used to be almost the inverse relationship. But do you think the market will say, okay, well, after the fact, okay, yeah, rates are rising. That means the economy's doing great, and I guess I should be buying stocks and blah blah blah. What do you think is going to be the win here? I mean, as far as from a trading standpoint, does you think the market is just going to not like the temporary higher rate structure, I guess, and just start to kind of slough off here? Not a lot of upside based on that, or what do you?
Yeah, I
I don't.
think for the first few rate hikes, the market always has the pom poms out and cheering for the economy. After that, people start getting a little bit concerned. So I think we could. Still, we're not going straight down from here, even if more hawkish comments are coming out from Yellen.
Hmm.
But I still think that we make a lower high here on the on the U.S. On the S&P, a lower high than we've had. So that's something to look at.
Yeah, I mean, it's just amazing how the market's gotten addicted to those lower rates, and anytime now the notes or bonds come off a little bit, they seems to freak the market out. But yeah, generally speaking, I agree with what you're saying. All right, so here's the S&Ps. Here's the big number, 1998. Yesterday we got below there, 1995. We want a daily close back at least within the balanced area here. I think we could probably get one today, folks. You could try to start the engines a little early. That's up to you. Before that happens, I'm going to go into the scanner and I'm going to show
Yeah,
you.
well, new daily profile just appeared today
Right.
on the ES1 on the S&P futures, and we're right at the top of that profile right now, which is 2015.
Right.
We reached that yesterday, and that was the high earlier today as well.
Yeah,
2011.
Joey's referring, folks. I'm showing a chart. I don't have real-time boxes on here. I'm showing Vega, which is that indication of a new profile. Joey's that profile he's talking about it's suspect to change until it's locked in. But what he is saying is reflected in this yellow bar, saying, "Hey, we got a new profile attempting to appear," and that's somewhat bearish also.
That's right.
So yeah.
So I think if we finish around these levels, 2003 or lower today, unless we finish at a new high above 2015, then
Right.
that new profile may recalculate again. But
Right.
if we close anywhere below 2011ish, to 2000, anywhere in that area today, I think that one becomes a new profile, and we're actually in the middle of that profile. So and lower part of that profile is about 1986. So within 1986 and this 2011 level, we're still basically kind of range trading, still trying to decide whether we want to break out of this
Right.
small downtrend here from. You draw like a downtrend line from November of last year at 2100, and then we topped again in December at 2080, and then again at the end of December at 2040. So if we draw a downtrend line there, it basically gets us to about 2015 here,
Right.
and that is the downtrend line that we have to break through and close above in order to kind of tell us that we're actually going to have another leg higher. But at this point, we've actually gone from 1800 straight to 2030 or so, 2015, and that's a far way to go without a correction coming in again.
Right. Yeah, I think in the short run, I'm with you. Just there's not a lot of upside here in the short run. And I think the
Also,
shorts
the basic materials led this whole thing up, and the basic materials have turned down, and they're the first sector to turn down. So a lot of the things on oil, I'm quite bullish on oil, but we could see, we could continue to see a pullback here.
Well, Joey, thanks for coming on today, man.
All right.
All right. I'll
Thank
pick you up
Good to
later.
be on.
Yep.
Speak soon. All right.
Guys, we'll be back in just a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Thanks for Tom calling in and Joey Jong from Hong Kong. We're showing the 10-year, again, after that housing starts number sold off a little bit here this morning. Got a big FOMC meeting today. If you guys have been living in a cave, going to the next level of primal lifestyle. Just kidding. Then you wouldn't know this, but the FOMC meeting today, some information coming out. I'm bearish on the S&Ps. I'm bearish on the notes. I think the XLU, which is up in the air as far as, I'm going to see if we got a print this morning here. Yeah, coming off a little bit, slightly. But, I did a video on the homepage of the TFNN website. It's up there, or should be up there already, based on the relationship of what that hawkish comment situation might happen, a little bit more weighted towards that than any dovish comments. And then that the rates obviously rising a little bit here, had that weekly close on the 10-year below 129. I think we're going to drift a little lower. I was hoping for a retracement back up into 129 to bang it again. but that might not happen now. It's not the greatest timing. Could have a knee jerk up there before we sell off, but and you know how that goes if you watch the action after some of these comments. But the XLU, that thirst for yield, may be satisfied to some degree with the treasuries rising a little bit in rates, and the XLU could possibly come off. But again, you could look at this as, oh my God, well, the market's not going to like higher rates in general. I don't want to overthink this, but this is something I've been overthinking. The XOU might be the safety play even against those higher rates in the treasury. So you've got to remember there's a chance that at some point, if these rates go higher, the notes sell off, the market doesn't like that in the short term. Towards the end of the day, people could pile back into this XLU. So just, as a safety situation, you're going to have to wait and see how much the market sells off if it does. But again, I'm a little more bearish on the short term on the S&Ps right now than I am bullish. If that makes sense. Peak D. All righty. So that's the situation on the S&Ps. Keep that in mind. Gold, Joey was on. He's looking for pullbacks. I'm thinking also, just kind of a wait patiently. We've got some big inflection points, a decent range to be patient and wait till the market comes to you. 12.18 buy point, 12.53 sell point. We're in the middle of that right now. So this is kind of sit on your hands trade. If you want to trade the ultra short term, that's up to you. Energies, we're going to take a look at crude. I had talked about 36.5, taking off some and then taking it all off at 38.5. That's kind of where I stand on this. This is, again, not something to short. It's kind of a no trade right now. We're going to have to see if we get a weekly close back above 38.50 to even get back in the game to trade that up into 42 and use that as support. All right. Look at the financials. We're going to just kind of hit that really quick. They like a widening yield curve. Tom stated that spread 30-year, 10-year situation is becoming really weird, 2007-ish weird. Don't know if the financials are going to completely love notes coming off a little bit here. If the 30, if that yield curve doesn't widen a little bit, they can't rip you off as much. So again, I don't think the XLF is something to mess around with here right now. I'm not short. I'm not long. Just kind of a wait and see on that one. Guys, you've been great. Larry is not around today. We're going to do a replay. I can't do a show, but I'll be doing it tomorrow if he's not around. Stay tuned. TFNN all day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.